Most banks will provide an interest rate in their approval letter that's first sent to you when the approval comes through, but just ignore that interest rate. It's not often a good representation of the interest rates that you'll actually have access to. That's because it's usually a undiscounted fixed or floating rate. If you haven't actually bought the property, there's a good chance that rates are going to change between when that document's issued and when you actually go through the process of loan structuring, confirming your interest rate. And if you're a high LVR customer, there's a good chance that the low equity premium potentially hasn't been factored in as well. Most banks now provide clear and transparent pricing matrices, which are usually updated approximately weekly, and they will provide an indication of the rates that are available to you without having to wait till later in the process based on the information that we have at the time. Usually the pricing that's available on these matrices is the best that is going to be available from that bank. There is sometimes scope to negotiate, but usually that is the best available. So at least we know clearly upfront and early in the process what interest rates you will have available to you, so we can figure out your exact budgeting for when your loans are going to settle. Just remember, your pricing is not actually finalised until you have bought the house or very close to buying the house. However, most of us advisors will be able to tell you pretty much what your interest rates are going to be based on the pricing schedules that the banks provide us. Occasionally we will need to request specific pricing from a bank, and that might take a few days, but we usually have a pretty good idea based on what's on offer either from the current bank that you're working with or other lenders as to what interest rate is going to be available to you, subject to any further movements beyond that pricing discussion. You'll have a choice between fixed and floating interest rates. We'll go through that in a more detailed discussion when we talk about how we want to set up your loans. And we'll also talk about products that might be available to you like revolving credit and offset, which can be suitable depending on your individual circumstance. With fixed interest rates, you can have the option to lock in your interest rate ahead of settlement date. That's called rate locking, and you can do this up to 60 days in advance of the settlement date. So if your settlement date is 3 months away, you can't actually rate lock until you're within that 60-day period. Your decision to rate lock will be based on our discussion and whether we think it's suitable based on the interest rate environment at the time. If interest rates are increasing, this rate locking mechanism can be really helpful. If interest rates are flat or decreasing, you may not want to do this because you may miss out on potentially a lower rate that will be available at a future settlement date. So we figure that out based on what's going on with the market and weighing up whether you want to take a bit of a risk on that interest rate or if you want to lock it in and take that certainty that's on offer. When interest rates are being confirmed, we'll also be able to tell you whether you're eligible for any cashback from the lender that we're dealing with. Sometimes we may need to request this specifically from the bank as well, but generally we have an idea based on your transaction type and whether you're a first home buyer or what level of equity you have going into the transaction can determine how much cash is on offer. So we usually know that up front, but sometimes we do need to double check, and that will obviously be confirmed before any loan documents are ordered through the bank. Cashbacks are cash incentives offered to you by the bank for you having your lending with them. Every bank has a clawback period, usually 3 or 4 years, which means you are tied to that bank for that period, or if you do refinance, shift to another bank, or pay the loan back, they can ask you to pay some or all of that cashback back. So you need to be aware of that. You are on the hook for it, and effectively the bank's buying your loyalty for that 3 or 4 year period. So we'll discuss loan types, interest rates, cashbacks, and all that juicy stuff when we have a proper loan structure meeting after your purchasing of your property has gone unconditional and we're getting ready for settlement.